we're going to turn to Joshua Pristaw. He's head of real estate at Pretium. That's an alternative asset firm that invests a lot, particularly in residential real estate. So Joshua, thank you so much for joining us. Let me start with exactly where Romaine was. Is the housing market broken?
Well, first of all, thanks for having me here. It's a pleasure to be here. As you mentioned, Pretium's a $50 billion alternative asset manager really focused on residential housing. So no, I don't think the housing market is broken. But what we're seeing is that supply is being destroyed faster than demand as a result of rising rates. And that's really a function of what we call the mortgage lock-in effect. So the average in-place mortgage is about 3.6% interest rate. People can't afford to move to a smaller house, let alone a larger, if their 30-year mortgage is going to more than double.
So if there are real problems in the residential real estate market, what's the solution? I mean, we're getting used to higher for longer, right? And people are saying, well, companies can adjust. Can the real estate market adjust to these sorts of 8% mortgage rates?
I think it can adjust. First of all, if you look historically, it's not unprecedented. It's been a long time since it's been that high. But the real solution resides with building more supply. And that's where we're focused, particularly in something we call build to rent. We're in the single family rental space. So we're focused on building new homes for rent in ownership communities where people can get access to good schools and proximity to good jobs.
But how fast can you actually do that? I mean, that's always been the question here is we know we have a housing availability issue here, particularly when it comes to affordable housing, but just to break ground and get that stuff up and running, depending on the municipality, can take years.
It takes time. Yeah. It can take years. I think what you're seeing in some parts of the country is regulatory changes to stimulate more development of housing, things like accessory dwelling units where owner occupants can actually build on their own lot and create more housing supply to the market. Mm-hmm. That's part of the solution. We have really deep and enduring partnerships with home builders where we're trying to give them visibility in their business to dampen volatility, to know that we'll always be there for a certain number of homes. Mm-hmm. So they'll sell to owner occupants and they'll sell to us and we'll rent them out. And we're having great success doing that.
Are there regions that are going to offer better opportunities for doing that than others?
Well, I was on a show at the end of last year and I'm happy to be invited back to Bloomberg, but I made the statement, follow the U-Hauls. We continue to see the best value long-term in the states that are in the smile of the country, Southeast, Southwest. Now, that doesn't mean that there aren't great opportunities in other places, but where people are moving and where the job growth is generally where there's not enough housing.
When you talk about build to rent, is there the financing available to build to rent? I mean, certainly in the commercial real estate area, I understand you're residential mainly. Yep. Commercial, there's a real pressure being put, particularly on the banks. We talked with Fed Chair Jay Powell last week about that very thing. This is what he said.
So there's work from home, and that's affecting downtown real estate in a lot of big cities, and higher rates as well, as you point out. So this is an issue that we pay a great deal of very careful attention to. Commercial real estate is not a principal risk or a major risk for the very largest banks. Right. It is much more for regional and really the smaller banks have proportionally a much larger exposure to real estate.
So there you heard Jay Powell saying it's a real problem for the regional banks, not the big banks, the regional banks on commercial real estate. Is there an equivalent problem with residential?
Well, there's a different problem for the market there, which is about 70% of all acquisition and development loans. That's sort of the nuts and bolts of how you get these things built. We're sitting with regional banks. But then when you think about the vertical construction of single family homes, 40% of that are done by private builders, and virtually all of their financing came from regional banks. So about a $90 billion financing hole needs to be filled somewhere. Our expectation is that what happened in private equity with a migration to private credit is what is going to happen now in residential credit. Is there will be an emergence of new players that replace the regional banking system in financing the home builder construction.
One of the things that I haven't quite understood is, given all the tightness in the housing market, why are rental rates going down at this point?
Well, I think there's a divergence between the type of unit you're talking about. So there's a divergence between multifamily and single family. We happen to be an operator in single family, and that's really demographics driven. So if you look at the millennial generation is now reaching peak household formation age, 35 to 49. And study after independent study shows that at that age, people want a house. So we're not building enough homes. Rents are rising for single-family rental. But over the next 2 years, you have record deliveries of multifamily, just as millennials are moving past that demographic age when they want a home.
I am curious, not to sort of pit generation against generation, but how much should we blame the baby boomers for this? Because I'm told that they're not moving, they're not giving up their houses, they got their multiple homes, and that's exactly. In all seriousness, but it does seem to be evidence that is also exacerbating the situation. And at some point, they're going to move on, obviously.
Yeah. So we call that phenomenon aging in place.
Okay.
And what used to be is that the home ownership rate, when you hit about 65, would drop precipitously. But like in everything else with the baby boomer generation, they're behaving differently. And so they are something like 10 percentage points more likely to be homeowners. And that home ownership rate doesn't decline until they hit about 84. So that if you think about that, that's 10 percentage points of homes across 40 million baby boomers is 4 to 5 million homes. So when people often ask me, well, where did all the homes go? The answer is grandma and grandpa still live in them. They haven't moved yet. But I think that's another 10 years or so before that changes.